Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures on May 5th, bringing you some commentary here in the energy markets. So let's get started. We've got June oil here, a touch weaker right now. We're trading around 99.5. We're off about a quarter here. Taking a look at the Brent, also weaker, but that we're down a little over $1 right now, trading around 107.5 area. So certainly we've got a little bit of a weaker tone there. Bucking the trend is the nat gas market. We're up about 4 to 5 cents. Complex weaker, RBOB's off about 3 1/4, heat's off about 2 cents. So certainly overall seeing a general weaker tone. Take a look at the equities market, which I think is obviously having some impact here on oil as well as some of the other commodities, and we've seen equities here quite a bit weaker in the overnight. Now since that time here we have come back since the opening of the cash market, but nonetheless here it has a bit of a weaker overtone. We've had a lot of violence escalating over there in Ukraine, here in the States talking about possibly tightening sanctions here a little bit more against Russia because of their involvement over there. But nonetheless, I think when you really take a look at the oil market, as I've mentioned in so many of these posts, looking at the current stockpiles, we have plenty of oil in my opinion. We're pushing upwards of about just under 400 million barrels. It's basically a record amount of oil that we have on hand for this time this year, and that's again in light of seeing refinery capacity utilization running at much higher levels. So we're seeing the refineries running at much higher levels, and yet we're still seeing builds in the overall stockpiles. And eventually here when the market starts to truly get back to supply and demand, and we see some of this fear premium come out of the market because of the stuff going on in Ukraine, I think it certainly will help translate into lower prices. Taking a look at here last week, on Thursday, we got down to a low of 98.74. When you think about it, you put it in perspective, I mean, crude was just pushing up at around $104 a barrel here just a couple of weeks ago. So we've really seen the steam come out of there. We've crossed down. We're now trading below the 200-day moving average, or excuse me, the 50-day moving average. Once we broke through that, market's kind of crept up a little bit, but as you can see, we're barely off the lows that we saw there last week. Now, 200-day moving average, and that's ultimately where I think this market's heading on based on the technicals and the fundamental picture right now, is sitting down basis the June oil around 97.25, and that I think right now is going to be the target. You look at the overall economic picture here. Look at the unemployment report that we had out on Friday. People talk about, yeah, we've seen the rate drop here, but why is that rate dropping? Is it because people are really getting back to work, or is it because they're falling off the rolls? And as we already know, it's because they're falling off the rolls. So the picture, in my opinion, doesn't look that great. And I think we're still continuing to skid along the bottom here. We continue to see weak data out. Yes, we get some positive reports, but they're followed up at some point here by some weaker reports, not just here, but also globally. And I think that in turn will result in a little bit lower demand. Of course, we keep seeing the stockpiles building. So ultimately, I think oil's going lower, and I've got some ideas on how you can take advantage of it. Call me, shoot me an email, and we can get into more detail. Futures and options on futures may involve substantial risk and may not be suitable for all investors.